Nothing like a great article from the Wall Street Journal to talk about the real estate market and provide a house hack, a Q2 update. EBIT profitable, still doing great, cutting costs, cutting G&A expenses, but now investing more into R&D. Why? Because we expect in Q4 or Q1, we are going to release a beta of our software as a service, a real estate AI app. We actually think it'll be the first ever that provides AI to both investors and real estate agents. And really, it's just a product that we use internally anyway. And we figure, hey, the real estate market is a $4 to $5 trillion market. Why not license this product that we use to other buyers or agents across the country when we can't go shop in every single market? In fact, that's really what this Wall Street Journal article refers to. Is this article talks about this breakdown of people who are buying single-family rental properties and how much money there is to be made in buying, renting out, and hodling essentially these single-family homes. And what you find is it's not private equity with thousands of properties and billions of dollars. It's actually more investors with 3 to 9 properties that dominate the market. HouseHack would be more in this sort of blue territory over here, but nowhere near this sort of like private equity level. But this idea of investors buying homes, total investor purchases of single-family homes now around 30% nationwide. Some of it is being driven by big discounts from home builders like Lennar and D.R. Horton, who are really trying to clear inventory. In fact, you're finding that now is this fantastic time for smaller investors to buy homes. And so that's what this Wall Street Journal article is about. Small investors who own fewer than 100 homes are securing more discounts and financial incentives from sellers, eager to close deals quickly as inventory piles up, as traditional home buyers sit on the sidelines. This is a huge advantage to HouseHack, and it's exactly in line with our strategy. Small investors are more active because they see a solid business in buying, fixing up, and renting out single families. There's no shortage of deals out there, we find. Smaller firms, they're talking about this Strand in South Carolina, taking on more risk. We personally don't think we take on a lot of risk at all, and we'll talk about our AI and R&D spend at the moment. But you're seeing a lot of deals in Texas and Florida because of the oversupply, the overbuilding. We've been warning about that since 2022. We saw that happen, so not a surprise at all. Here are the discounts from inventory from Lennar and D.R. Horton. So certain parts of the country certainly oversupplied, whereas other parts of the country, you still look at California, for example, very undersupplied still and underbuilt. But in line with this article, we may as well give sort of a quick roadmap of what our intentions and game plans are and how they're evolving for HouseHack. So remember that when we started HouseHack, which remember you can invest in HouseHack, it's open to non-accredited investors. You could go to househack.com and read the paperwork there, read the disclosures, the PPM, the offering circular, right? Every investment has risk. But we still have our 5% bond round open. But this is convertible into stock at $1.40 a share as soon as 2027 or later. The goal is to IPO 2028 to 2030, depending, obviously, if we're like in a big recession during this time, we'll delay it a bit. But that's when our goal IPO is. That's still on track. This is the round. The reason we're structuring, by the way, the current offering as a bond, a convertible bond, is because you get preference on the company. Bondholders always get preference over equity holders. You get a 5% yield paid to you monthly, right? So it's an annual yield paid monthly. And it converts into stock with no premium. So we actually think this valuation is pretty low. We will probably close this. My goal is to close this round once the Fed starts dropping rates, because 5% is just going to be too high at that point. So probably September 17th. So I'll say maybe, right? Because it's not just up to me. It's up to the board of directors, obviously. But the board of directors did just approve, we just approved our AI spending and investment plans for our SaaS biz. Just last week we did. And our plan is in Q4 to have our limited beta and wider release into 2026 for agents and investors. And we actually really want to target exactly this market right here. And so we're really excited about it because, we look at, for example, just the numbers that we have in the community here. We like the Meet Kevin community. We know we have over, 4,000, I think it's actually like 3,700, something like that, real estate investor course members, something, I can't remember exactly what it is, but it's plus over, I think it's like 1,800 agents, maybe even more, right? So like we look at this community as people who would be so perfect to be as part of our beta testers, and then obviously eventually we'll expand this into software biz. But what we don't want to do is no Elon. So this is actually really critical, and this is something the board and I spoke about in depth. So something that we want to provide to investors when it comes to HouseHack is we just want to give people the confidence that no politics, not anytime soon. Obviously can't make a guarantee like forever, but now is not the time to integrate politics and mess with politics or like run for governor or something stupid. Like now is the time to focus. And so the focus for HouseHack right now needs to be really, really clear and simple. And that is September to December. We'll probably buy, $10 million of real estate, holding about $4 million of real estate for builds or reserve. That's the tentative plan. So we'll be buying wedge deals. We think what we do is when we buy deals, we think once we fix them up, we're up 20% on them is usually what we think. So we could see a $2 million, plus or minus boost from those wedges this year, which is great. This is on top of the, the assets that we already have. All of our tenants are paying, all tenants current and paying timely. And we're fully occupied, which is great. There's really, there are no issues here. The gross margin is about, for our properties, about 32% expense. So gross margin, I guess, would be 68%, which is roughly in line. Usually you see about 65% gross margin, which is great. This is fantastic. We're reducing our G&A as well, which is great. Reducing G&A by decreasing some internal costs. And open to interns again. If you're interested, I did put out a post on X, and one of them is for our contracting AI team, and the others would be in-house. But some of them could also just be for Meet Kevin, so it's separate. But hiring AI talent, we've got a good contracting team already for our AI talent, which is great because it gives us a lot of flexibility, and we're doing some great things. Legal, if you get a bar license, California, Texas, Florida, you could be a new graduate or you could have experience, doesn't matter. Just follow the instructions, send us your application. We're always hardworking, non-entitled badasses, I always like to say. But we think we're very, very efficient with our expenses, and that's a big deal for us because, recession or not, we always like to say, hey, you want to be prepared and be in the best best position with the company, all right? So no politics. Now, when I say no Elon strategy as well, I want investors in HouseHack to know that about 5%, like I'll put it this way, maybe 5 to 10% dedication towards, or I should say spend, not dedication, because dedication would be more spend on AI. The board and Kevin do not want to pull an Elon where, 1 year Elon says we're going to manufacture 20 million vehicles. Then a few years later, JK, we're going all in on robotaxis. and Optimus robots, and we need a whole new plan. Like, that to me is a bad strategy. You know, other people might disagree and say, no, this is great. This is what Elon should be doing. He's pivoting. I don't think, like, HouseHack will not make that kind of pivot. Let's put it that way, right? So that's why we think if we can put a lot of our efforts in, but we don't want to spend more than like 5 to 10% of our capital on artificial intelligence, because we got to prove our model first, right? So we're gonna show the AI SaaS that we have. We'll do our limited beta in Q4, probably, you know, course members and you know, anybody who's signed up at mekevin.com. You guys will hear about it first, and then we'll like beta test with y'all. And the goal is to get to a wider release in 2026 or so. The cool thing about this is it'll really allow us to be sort of data dependent, and we'll see, because if, you know, let's say we can license our product for $199 a month, and, you know, through YouTube we get to 5,000 subscribers, right? Let's just say if this product is so amazing or whatever, right? I mean, if you think about it, that works out to like $2,400 a year, which if you get one wedge deal with this sort of product that makes you $100,000, $2,400 is cheap. It's like a discount. This might honestly be too low. But if you go $199 times 5,000 times 12, you know, that works out to about 11. Oh, well, I guess I could have just hit equal. That's awesome. AI. It's really just a calculator built into the notepad, I guess. But yeah, I mean, that would be $11 million of annual recurring revenue. You have to understand, that is like, that would like, you know, 5x the gross, you know, our income now, which is like insane. So like what SaaS could do for HouseHack is insane. You know, that on a valuation basis, you know, people say companies will trade for 20x ARR. You know, 20x ARR is, what is that, $238 million? It's insane. So like, there's this really big opportunity, we think, with HouseHack right now. And so this is why we're going to end the fundraise, you know, probably before. This is why we want to probably end the fundraise before we really go wide with our AI product. We don't know if it'll catch on, but we think the potential is really high with what we've built, because we've been building our, you know, sort of, we called it big data before it was AI. We've been building this out since 2018, since before HouseHack even existed. And so it's going to be really, really exciting. And we think we can, you know, easily grow this, you know, just through, you know, the smart investor people who watch the channel. So we're really excited about that. And we think that, like, we think the downside is really limited because, again, we're not going to pull like this Elon all-in strategy and pivot. So the way you got to look at HouseHack is look at HouseHack as, you know, $75 million in assets. And right now, maybe we'll spend $500K on AI, you know, maybe, you know, plus or minus. So honestly, 5 to 10 is wrong. It's probably more like, you know, 1% on AI spend for now until we prove it, right? So 5 to 10% would be more like if we really started rolling, right? So if the AI takes off, if the AI really takes off, and this would be like annual, right? As we prove it. If the AI really takes off, sure, 5 to 10% is reasonable to blow it up. But what we plan to do is any profit from AI, which the margins we think will be insanely good, we'll just dump into buying more real estate. So basically, think about it like this. You know, HouseHack is basically a $75 million asset company. And, you know, obviously we've got some bond debt in there, but we have no bank debt, right? No bank debt. we take this, we take our IP and launch, an AI SaaS biz for real estate, and any profits from this back into real estate, mostly. I call it like 90% back into real estate. So we get to take this high cash flow, high margin AI SaaS and throw it into a high capital intense real estate investment, but that also then creates tax benefits, right? Which also generates sick tax benefits, both R&D expensing for AI and real estate accelerated depreciation, which is huge for real estate, frankly, for investors in HouseHack. So, if we pull this off, obviously the $1.40 per share that HouseHack was valued as, basically just as a real estate holding company in Aug 2024 will look, and that was the low end, which was towards the lower end of the range of 1.4 to 2x book, is going to look tiny. But this is a risk, right? But we don't know if we can pull it off. So we're going to try. But that's for us, this is a pretty incredible Q2 update because it really, it shows that we've got some really amazing things going on here. Again, we're EBITDA profitable. We're cutting even more G&A expenses. Now we're putting more into R&D though. So we are putting some more expense into R&D, which is reasonable. We think this Q4 limited beta, people will tell us right away if they like this. You'll tell us. So if you're, a course member, you'll be like, oh yeah, this is awesome. We're not. And if it's not, we'll try to make it better. And we think it's awesome. And then if we can make it better and it works, great. We think there's huge potential profit in it, and we'll just throw all the money back into real estate. Well, 90% of it. That's the goal, right? I maybe shouldn't use percentages because obviously these numbers can change. This is just sort of a live, there's no script here. I'm just verbally trying to share information with investors. We also, we had a really expensive, I think the easiest way to just put this is we had someone in-house that did legal work that was very expensive. We don't need them. We just don't have the need for them. So we are saving a crap load of money by not having that. And we'll be contracting or working, with interns because we just always want to value sort of the value we're getting for what we're paying. And I think we were paying way too much. So this is good. This is always where, as the CEO, my job is to go through and make sure we're not wasting money and we're cutting expenses everywhere we can. This sounds crazy, but I'm all right, HouseHack is not getting enough benefits from this Amex Platinum. We are going to be downgrading this before our renewal. These fees are too much. And so but I think that's really important for a business to stay in business is you look at all of the little expenses. But then, this Wall Street Journal article is right on. It's basically this idea that there's money to be made on real estate, and this is what HouseHack does, but there's no shortage of money to be made. And that's why we think this AI is really exciting. So, somebody in the chat's here saying, any update on HouseHack HELOC funding? So, as far as lending, all right, this is kind of way down the road kind of stuff in my opinion. So I'd say Q4 buy homes and beta AI, Q1 wide release AI, 2026 maybe we'll look into some broker dealer and MLO HELOC lending ideas, but these will be delayed until AI proves itself. Because if AI takes off, I'm not touching these ideas because why would I? like we're just going to throw more money at AI rather than do that, right? Like this is like down the road kind of stuff, doesn't matter. Right now it's like buy homes and beta the AI, okay? A very, very simple business, okay? We buy homes with our AI. We have bought homes with our AI. We think other people will benefit from it, so we want to potentially license it. We'll see how it goes. And again, you know, potentially TBD, September 17th close, fundraise, TBD, maybe, I don't know. Again, if you want to invest or you want to increase your investment into HouseHack, a lot of people have been emailing us for that. Remember, you can just go to househack.com and you can click invest. And then if you're an accredited investor, great, just hit yes. If you have questions, you can email us at ir@househack.com. If you're not accredited, hit no, and then you can invest. You could read the offering circular, you know, whatever. You could read about what we do. These are actual properties, by the way. Like, these are actual HouseHack renovations. That is an actual building HouseHack owns. Like, the thing that's unique about us is we're, like, in my opinion, of course, like, I don't see us as some, like, flash in the pan, like, AI startup or some, you know, BS or whatever that's here today, gone tomorrow. Like, we actually have about $75 million in assets and very little bond debt with no bank debt. Like, this is great. It's like we have such solid foundations, in my opinion. Like, you'd really have to try to screw it up, you know? So, yeah. What's HouseHack's extra cash doing right now? Money markets right now, baby, or short-term treasuries, like 3 to 6 months, right? But that's because we're getting ready to go shopping in Q4. I don't like buying in Q1 and Q2. I don't want to be part of the spring rush, so I don't do that, right? Kevin, I think you said this, but starting the testing of the software with course members, real estate investors, and agents to get early feedback to build from it. That pool can give valuable feedback. That's exactly what we're going to do. Totally right. So yeah, we've already spent a lot like building out our AI. So that's why like some people are like, oh, is that enough that you're spending on AI? We don't need to spend more than this. We don't need to spend more than this. Like we already have a really good AI product. We don't, because we're not building something off the ground. So it's actually pretty impressive, I think, what we're able to do. Do you only do single family? Oh, I mean, I just showed you. We had this is an beautiful apartment building. We've got a few beautiful apartment buildings, but this winter we will only be buying single families. Yeah. Somebody says jet fuel expenses. Nope. HouseHack has paid $0 for any aircraft expenses, and that remains to be true and will remain to be true for as long as I can tell. So let's see here. Okay, so I answered that. I like your plans, Kev. So glad to be a first-round investor. Oh, thank you for saying that. Is this the HouseHack master plan? Well, I mean, like, this is the same plan that we've had from day one, right? Like, if you go back to 2022, it was buy houses, and by the way, we've got some cool AI. Maybe one day we'll license it in the future. Like, we've literally done everything we said we would do. Is what we have done. Like in 22, we promised we're gonna go buy homes in Q3, Q4 of 2023. That's exactly what we did. We said we had in-house AI, maybe we'll license in the future. That's exactly what we're doing right now. Well, you know, last year we're like, hey, we'll go buy again, Q3, Q4 of 2025. That's exactly what we're doing. We said we would buy a bunch of homes, stabilize them, and that's exactly what we've done. The tenants are current, tenants are timely, like, we have a stable portfolio. I think we're in an awesome spot. Like, we don't need to blow money, and that's not what we're gonna do. Would HouseHack use Robinhood's token feature before going public? No, I mean, I don't have anticipations of that right now. I mean, I don't know. Like, how am I supposed to answer that right now? We're not in a place to even think about that. So. Section 8's great, you know, as long as the underlying tenant is properly qualified. Does HouseHack invest in commercial real estate? Well, I want to say no, but technically we do rent to one restaurant because it's built into our apartment building. But beyond that, no. So, yeah. Good question, though. Good question. So, yeah. There you go. So I appreciate you listening in on a little house hack update here. Again, if you ever have questions, I think one of the best ways to ask questions, frankly, is just come to these live streams that we do on sort of a daily basis. You know, I'm pretty much live almost every single day. You're always welcome to ask questions. It's not like you have to pay to ask a question, right? So just ask questions. Usually I love answering the house hack questions. You know, then if you want to email us, you could also do that. It's IR, like investor relations, at househack.com. So we think it's pretty straightforward. As always, though, you know, like you have to say it, but it's obvious every investment has risk. You know, read the offering circular or the PPM, depending on if you're accredited or non-accredited, and there you go. There you have it.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.